This is a Patreon-only exclusive. Prisoners of Gas Dependence, Kazakhstan, Uzbekistan and Turkmenistan's Natural Gas Industry. Written and voiced by Michael Hilliard. In the space of a few months in 1991, the USSR fell from the world's second superpower to 15 fledgling republics. And whilst all these republics possessed unique cultures, leaders, and futures, 3 of these new countries were dealt similar geopolitical hands. Kazakhstan, Uzbekistan and Turkmenistan all inherited the benefits of vast reserves of oil and natural gas, but all 3 of them also became landlocked states trapped between China and Russia seemingly overnight. Natural gas is a crucial fossil fuel, used for many functions and processes including heating and electricity generation. And as a response to the exponential growth in the demand on natural gas, Central Asia has become a crucial contributor to gas extraction and generation figures, particularly in the Chinese and Russian markets. Just in 2019, natural gas reserves in Central Asia comprised 21.7 trillion cubic meters, around 11% of the world's total proven gas reserves. However, keeping this in mind, Central Asia's ever-expanding role in the extraction of natural gas is feeding into the region's increasingly competitive energy politics. Whilst these republics do have an abundance of the natural resource, they possess minimal capital and technology to enter the full gas production sequence alone. In response to this situation, multinational corporations from countries including Russia and China have an ever-increasing influence in production in these countries, creating a struggle for regional influence between Beijing and Moscow. Part 1. Kazakhstan. Whilst cursed with being a landlocked nation, Kazakhstan was also blessed with an abundance of natural resources beneath its soil. The former Soviet state sits upon natural gas reserves amongst the top 20 in the world, and in addition to the oil and gas found predominantly in the west of the country, Kazakhstan also separates itself with beneficial reserves of other resources like uranium, copper, and other ferroalloys. Although despite possessing this plethora of resources, the Kazakh government has seemingly placed an overemphasis on the oil and gas industry within its economy, which by 2019 would make up over 60% of the country's net exports. What this overdependence on hydrocarbon exports has meant for Kazakhstan is that when the oil price drops sharply, the country's GDP growth rate also declines expeditiously. We can observe this firsthand with the oil crash of 2015, where the export-dependent nation would lose 42% of its GDP over the space of just 2 years. Much like the country's first president, Nursultan Nazarbayev, who ruled from 1990 to 2019, large parts of the Kazakh infrastructure are also holdovers from the Soviet era. Kazakhstan had relied heavily on Russian technology for the establishment of its gas industry during the USSR, and remained reliant on Moscow directly after the Soviet collapse, by doing very little domestically to improve the efficiency of its resource extraction technology. This trend continued though, with joint ventures between Russian and Kazakh state-aligned energy companies, with Russian firms often acting as the lead, buying up Kazakh gas and oil to refine, export, and sell into the Chinese and Western markets. Through the wealth these resources gave them, Kazakhstan has managed to position itself as an economic leader amongst the 5 former Soviet Central Asian states. Kazakh citizens enjoy the highest PPP, or purchasing power parity, of any of the former Soviet Central Asian states, and the country also receives more foreign direct investment than any of the other Central Asians. Despite this though, Kazakhstan appears to be entering what many economists would call the middle income trap, with its annual GDP growth rate beginning to level out at about 4% per annum, and the technological catch-up effect vastly diminishing. Whilst Kazakhstan has greatly improved its citizens' standard of living when compared to the end of the USSR, its economic diversification still closely echoes that of its Soviet-era makeup. Part 2. Uzbekistan. Uzbekistan is one of the only 2 double landlocked nations anywhere in the world, making access to the wider global markets incredibly difficult for Central Asia's most populous state. And yes, whilst the Uzbeks do possess large natural gas reserves, they would be forced to transit that gas through Kazakhstan or Turkmenistan to be able to reach the open market. And both of these countries are net gas exporters themselves, and would likely impose tariffs on Uzbek gas to protect their own gas industry's competitiveness. This has forced the Uzbeks to greatly diversify their economy with gold, copper, and basic manufacturing. Unlike Turkmenistan, Uzbekistan is going through a period of liberalization since the death of their first leader, Islam Karimov, in 2016. In response, Uzbekistan is implementing overdue reforms to move its economy from a more agricultural-based one to one of higher value-added and a specialized industrial core, with an example being manufacturing products like auto parts. Uzbekistan has made progress in this area in particular as the price of labor is rising in Kazakhstan and the regional supply chains are developing enough to support production fracturing. As a side note, production fracturing is where you separate the manufacturing process over a couple of countries. As an example, you'd make the chips in Taiwan, but you'd make the iPhone in China, and each can specialize and get better at their own part of the production process. This has been incredibly important for Tashkent, as with Uzbekistan's geographic containment and its decreasing returns on capital and commodities investments, the country must look elsewhere for growth. As part of these new reforms, the majority of Uzbek gas is now diverted away from outside markets and instead is being devoted to domestic power production, where its central regional position actually provides it with a comparative advantage. The country has attempted to open up its energy market even further by allowing international investment into the state monopolies like Uzbek Energy and then forcibly breaking up its state gas company Uzbekneftgaz in the hopes of promoting domestic competition within the market. The government is trying to avoid the transit costs and tariffs that would be imposed on it by Turkmenistan or Kazakhstan, and instead Uzbekistan has pivoted to producing and exporting the more valuable electricity to its neighbours rather than just the raw gas itself. As a side note, this article was written a little while ago, and Uzbekistan has actually taken this concept further. So right now, Afghanistan's power grids, a lot of Turkmenistan's, even the Kyrgyz and the Tajiks often get a lot of their power from Uzbekistan. Instead of trying to compete for the European energy markets by exporting gas into Europe, they use that gas to make electricity and then sell that electricity to their neighbours. It's been quite a successful program in Uzbekistan. But moving on now. Part 3. Turkmenistan. Of the three nations examined here, Turkmenistan is by far the most economically reliant on the gas industry. The Turkmen leadership has continuously disregarded economic diversification to the point where oil and gas now make up 89.79% of the country's net exports. Whilst possessing few other natural resources, Turkmenistan does hold the 6th largest global reserves of natural gas. This is an amount of natural gas rivaling other major gas players like Qatar and the UAE. But unlike those two, Turkmenistan isn't a world player in the gas markets, due mostly to its geography. Now in the article on our website there is a nice diagram here, but I'll take you through it. So if we look at Turkmenistan's geographic position and look at where it needs to get its gas to, well, let's look at the 4 options. If they go south into Iran, well, Iran's a gas exporter themselves, so they're likely to impose tariffs, and once you enter Iran, it's also going to be hit with Iranian sanctions, which makes it very difficult to actually purchase the gas. They can't go into Uzbekistan, as well Uzbekistan doesn't want to buy any gas from them. They have their own natural gas reserves. They would love to increase the TAPI pipeline, the Turkmenistan, Afghanistan, Pakistan, India pipeline. But to do that would require Afghanistan to be stable enough to build a multi-million-dollar, multi-year pipeline. And most international investors just straight up aren't ready for that. So the only other option is through Kazakhstan into Russia and China. And Russia doesn't want to buy much of their natural gas, as they have more than enough of their own. So the only remaining customer for the Turkmens to sell their gas to is really the Chinese. And as of 2018, China now purchases 93.2% of Turkmenistan's natural gas exports, in a policy more analogous to colonization than a trading partnership. The Chinese Natural Petroleum Company, or CNPC, has been working with the regime in Turkmenistan for decades now to improve the efficiency output of Turkmen gas. But the CNPC has invested very little into any other sector of the Turkmen economy. The Turkmen state gas company, Turkmengas, would now find it difficult to operate their plants without Chinese technology and expertise, making any diversion away from Chinese reliance even harder. After years of this reliance, China has become the scaffold for Turkmenistan's economy, and many worry that the over-reliance on China would be disastrous for Turkmenistan in the long term. In a terrifying sign to the government in Ashgabat, China is already beginning to diversify its gas partners, and at this current level of reliance, Turkmenistan has minimal leverage in the price negotiations with Beijing. Part 4. Chinese and Russian competition in the region. When traveling around the Central Asian region, you'll often find most citizens of the former Soviet Central Asian states culturally feel closer to Russia. Economically though, Central Asia is being increasingly pulled toward Beijing, with China now purchasing just under 80% of Central Asia's total exports. China also shares direct borders with 3 of the former Soviet Central Asian states, and values the fact that this pool of natural gas in its backyard avoids the instability of the Middle East or the contentious shipping lanes of the South China Sea. Whilst it was Russia that built and invested into much of Central Asia's gas infrastructure originally, it looked to buy the gas from these states, refine it, and sell it on to wealthier nations for profit. China, on the other hand, has the capital to be able to co-opt these industries and directly consume the gas produced from these republics. leaving more of the profit margin within Central Asia. Russia had attempted to reassert itself into these industries through proposals to create Central Asian gas cartels, but this proved unappetizing to even Russia's closest ally in Kazakhstan. Instead, year after year, China builds new roads and pipelines and provides FDI into Central Asian state companies, which assist some of these regimes to stay in power. And whilst China does still import gas from countries like Australia and the Middle East to maintain economic diversity, Central Asia in particular are beginning to receive the lion's share of China's medium-term gas exploration funding, with Kazakhstan and Turkmenistan incorporating China so heavily into their economies. But that leads to the question, with Kazakhstan and Turkmenistan incorporating China so heavily into their economies, does it open the door to a future race to the bottom when it comes to price? As Russia is pushed from the European markets and begins to compete with Kazakhstan and Turkmenistan for space in the pipelines toward China, the negotiating strength will be on the Chinese side. Conclusion. Central Asian gas exports are set to climb, with demand rising in countries looking to use gas as a traditional fuel for producing energy. The difference is that whilst international gas exporters like Australia have an open market to sell into due to the cruelty of geography, the Central Asians only have two options, with one of those being a natural gas exporter themselves. Fundamentally, all three of these republics have been drastically hampered just by the reality of being landlocked nations. And as statistics show, being a landlocked nation is often a severe handicap to your economy. Uzbekistan has embraced its position in the very center of Central Asia, choosing instead to mold itself into an exporter of basic manufactured goods and electricity based on its comparative advantage in gas and labor costs. But on Kazakhstan does have some geophysical fundamentals that have allowed them to become the transit hub between the gas fields of Central Asia and the energy-hungry markets of China and Europe. As unlike the other two, Kazakhstan shares a direct border with Western China, as unlike the other two, Kazakhstan shares a border with Russia and with Western China, and is doing whatever it can to position itself as a safe and reliable trade partner for Beijing. The worrying case here is definitely Turkmenistan, who have some of the most atrocious current fundamentals within their economy. And at the time of writing, it has created an incredibly fragile single industry economy, so if the price of gas goes down, so does Turkmenistan. Despite that, there is still one hope left for Turkmenistan, that if Ashgabat can connect its pipes into Azerbaijan and onto Europe, or Afghanistan stabilizes, or Iran joins a Western bloc, the economic potential for Turkmenistan is enormous, as it does open up the ability to trade with other partners. For now though, these three republics are doing what they can to change their proximate factors, through investment to build up things like oil and gas refining in Kazakhstan, or building up an automotive parts manufacturing center in Uzbekistan. These republics are striving to produce more valuable parts of the region's supply chain. What the analysis tends to show us though is in the short term, they'll pretty much continue to trade underneath the radar for most observers. But as the demand for natural gas grows, and the geopolitical fulcrum continues to drift toward East Asia, these three Central Asian gas giants may become the fuel in Asia's economic engine. Prisoners of Gas Dependence: Kazakhstan, Uzbekistan, and Turkmenistan's Natural Gas Industry. Written by Michael Hilliard and edited by McCagh. If you have any questions or follow-ups on this article, feel free to put them in the Patreon-only Q&A, and they'll get answered in the next Q&A video. I hope you enjoyed this article, and we'll see you in the next one.